Hi, my name is Alan Porter, and I would like to thank you for attending this webinar. I think you will find it informative and educational. I never thought that I would be doing this. I started my life back in Nebraska, where I married my high school sweetheart. I had a 13 draft number and Vietnam was hot and heavy. A recruiter told me that he could keep me out of Vietnam, but I had to go combat arms, either infantry artillery or armor. Well, I chose armor to become a tank commander. I was stationed at Fort Carson, Colorado, where I lived with my wife and new baby. We had been on tank gunnery for almost 2 weeks, and I'm covered in dirt and grime, and of course did not have a shower when a helicopter landed, and the pilot got out in his flight suit with his Ray-Ban glasses and a mustache. And I thought to myself, I want his job. I then thought, what do I want to do? Command troops or fly? And I chose to become a warrant officer, a technician, or expert in the field. And I became an instructor pilot in the UH-1 Huey, the OH-58 Kiowa, and finished my last 9 years as a Black Hawk standardization instructor pilot. I retired in 1993 and tell people that I had a safe landing for every takeoff, and I dodged all the bullets and figured I had a successful career. After retiring from the Army, I built a successful real estate career and mortgage business until 2008, when the mortgage crisis hit. I've had some tragic things happen to my family that have guided me to the path I'm on today. I live in Fayetteville, North Carolina, and my son lived in Little Rock, Arkansas, with his wife, Lynn, who was 39, and my 2 granddaughters, who were 7 and 4 at the time. We went down to see them in 2009 for Christmas. My son had been 100% disabled for 3 years and still not getting his disability until an attorney was hired, and finally he received his disability in the summer of 2010. My son is still disabled. On January 5th, 2010, my entire life changed. Todd's wife, Lynn, called me and said, Alan, I've been diagnosed with stage 4 pancreatic cancer, been given 6 months to live. We were all shocked, of course, but there was a huge financial problem for my son's family, as there was no money coming in, and I'm helping them out, but for how long? I was like 99% of the people out there that thought life insurance was a death product, that you had to die to take advantage of it. Man, was I wrong. Lynn had an insurance policy with a terminal illness rider on it that let her access the death benefit that was in the hundreds of thousands of dollars completely tax-free, which I knew nothing about within 1 year of diagnosis of this deadly disease. If he had not been for life insurance, my son would be bankrupt, and it took a huge financial strain off me. Lynn died a year later, and my son moved back to North Carolina and lives with his 2 girls in the house behind me. There was enough money left over from the death benefit to give them a fresh start. It did not stop. Approximately 1 year later, my daughter, who is an oncology nurse, and her husband, who is a doctor, had given birth to my 3rd grandson. A few months after that, she was diagnosed with breast cancer, and it was very bad. We were not sure that she was going to live. Nicole was 10 years cancer-free last year, but her problems were not over. She was diagnosed with Graves' disease and developed thyroid eye condition. There's only one treatment for it right now, and it is a drug called Trapeza. She was given 8 infusions, the first one costing almost $32,000, and the last one in May of 2023 was almost $250,000. Well, in January of 2024, the thyroid eye condition came back. The doctor told her in February that, I'm sorry, Nicole, there's nothing we can do until you go blind, and then we can operate. I thought, what a terrible diagnosis. So they tried to get her into Duke for a study of this disease, but since she had taken the Trapeza, she did not qualify. They did get her into the Mayo Clinic in Rochester, Minnesota, where she went for approximately 4 days for testing and consultation, but there's basically nothing they could do for her either. They had a drug that was not approved by insurance and only maybe 50% effective, but they weren't sure, and believe it or not, that drug was more expensive than the Trapeza was. If it had not been for insurance, my family would be financially ruined, as would many of my clients. The things that I have learned, not only from study, but my own personal experience, 99% of the people, to include financial planners, CPAs, and attorneys, know nothing or very little about. I have had people with doctorates in accounting and finance ask me to speak to their students. I teach people to think outside the box of conventional financial planning. Let me ask you this. What if I could show you a financial vehicle? If properly constructed, could be a tax deduction, grows tax deferred like your qualified plans, has tax-free distributions such as your Roth 401k and Roth IRA, does not affect the taxation of Social Security or the means testing for Medicare Part B, which will be in the thousands per year and is protected from lawsuits, liens, and judgments. Not only that, it would give you protection from market risk and the ability to take advantage of a down market, create a legacy, become your own bank where you borrow money from yourself and pay yourself back compound interest instead of to the financial institutions, and eliminating the effective interest cost that you pay on the money that you borrow. It would also give you hundreds, if not millions of dollars of tax-free money for pennies on the dollar to take care of long-term care costs, which is extremely expensive. The greatest college funding vehicle that is self-completing, the best wealth transfer vehicle available today, and access it whenever you need it. One of the best things about this financial vehicle is it eliminates or mitigates the risk in retirement that a stock portfolio, bond portfolio, money market funds, real estate, CDs, and mutual funds only compound. Some of these risks include sequence of returns risk, which 99% of the people do not know about and will decimate your retirement. The number one fear in retirement is running out of money before you run out of life. Longevity risk, which is a risk multiplier, market risk, tax risk, government risk, inflation risk, not reported on FAFSA, so it does not count against financial aid eligibility for college, and the list goes on and on. If I can show you a financial vehicle that can do all that, is that something that you would like to know about to protect your family and your financial future and to create a legacy? That financial vehicle, cash value, life insurance, whether it's whole life or a properly constructed index universal life. In the next 20 or so minutes, I'm going to teach you all about this. I'm sure you have heard what I call financial celebrities like Dave Ramsey and Susie Orman say, insurance is a terrible investment. You should buy term and invest the difference for your retirement. Well, let me say this. I agree with about 50% of what they say about getting out of debt and maintaining great credit. That is good advice. But let me say this also. I don't know if they're licensed in anything, and they were certainly not fiduciaries that have a legal obligation to look out for the best interest of their clients. I am a certified financial fiduciary. The first thing I would tell them is insurance is not an investment. In fact, it is derogatory to call insurance an investment because it's in an asset class all its own. There's no other financial vehicle that will give you all the benefits of a properly constructed cash value life insurance policy or a fixed indexed annuity that will give you peace of mind, especially in your retirement. And as I said before, will eliminate or mitigate the risk in retirement that those other financial vehicles only compound. Let's dig deeper into strategy number 2, Roth conversions and strategic tax planning. A lot of people I talk to think they're doing the right thing because they've been maxing out their traditional 401k or IRA. That's what they were told to do. Defer your taxes until retirement. But let me ask you this. Do you think taxes will be higher or lower in the future? Most people I talk to agree higher. So let me tell you about a client of mine. We'll call him Bill. Bill was in his late 50s, successful, with a couple of million in traditional retirement accounts. But when we ran the numbers, I showed him that if he simply kept doing what he was doing, by the time he started withdrawing that money in retirement, it would bump him into the highest tax bracket. Even worse, his Social Security would be taxed, his Medicare premiums would skyrocket, and he'd lose control over his income. We worked together to build a 5-year Roth conversion plan. Every year, we converted just enough to stay within his optimal tax bracket. He paid some taxes now at today's lower rates. But the benefit? Now, in retirement, Bill has hundreds of thousands of dollars growing tax-free, no required minimum distributions. does not affect the taxation of Social Security or the means testing for Medicare Part B, which will be in the thousands of dollars per year, and far more control over how and when he takes income. Roth conversions aren't for everyone. You need a strategy. You need someone who understands how the tax brackets interact with Social Security, Medicare, IRMA, and your entire financial picture. But done right, it can save you tens, sometimes hundreds, of thousands of dollars in taxes over your retirement years. Now let's talk about strategy number 3, fixed indexed annuities with lifetime income riders. I mentioned earlier that the number one fear in retirement is running out of money, and this is backed by studies from ARP and Alliance. People are terrified they'll outlive their savings, especially in volatile markets. Let me introduce you to Karen. She was 67, retired, and had her money in a traditional stock and bond portfolio managed by an advisor. Then 2022 hit, the market dropped, and she lost nearly 20% of her portfolio. But she was still withdrawing money every month to live on. That's called sequence of returns risk. She was selling shares at a loss, locking in those losses forever. When we met, I showed her a fixed indexed annuity with a lifetime income rider. This product gave her two things she desperately needed: guaranteed income for life and no market losses. The annuity locked in gains during up years and protected her from down years. Her income was guaranteed, even if she lived to 120. Now understand this: she is eliminating sequence of returns risk, which will decimate her retirement, the number one fear in retirement, running out of money before she runs out of life, longevity risk, which is a risk multiplier, and others that stock and bond portfolio only compound. Here's the amazing thing. When she saw the math, she realized she could cover all her essential expenses, mortgage, utilities, healthcare, with guaranteed income from the annuity, Social Security, and a small pension. That gave her peace of mind. She could let the rest of her money grow or use it for fun, travel, gifts, grandkids. Another great thing about this strategy is you only need about 2/3 of the money of the stock and bond portfolio at 65 to give you the same distribution rate at 4%, which leaves 1/3 that can be used to pay taxes and turn it into a Roth IRA. This eliminating the taxation of Social Security and the means testing for Medicare Part B, which again will be in the thousands of dollars per year. Many of the advisors and CPAs know nothing about this. Now, strategy number 4 might surprise you. It's all about playing smarter with the tax code, using tools that most CPAs and advisors simply don't talk about. Let me tell you about James, a business owner in his early 60s. He had a successful company, but he was paying close to $100,000 a year in taxes. He didn't think there was much he could do until we sat down and reviewed his situation. We restructured his business into an S Corp, put in place a defined benefit plan, which allowed him to contribute over $200,000 per year pre-tax, and we created a life insurance retirement plan, LIRP, funded with bonuses from the company. We also used a non-grantor irrevocable trust to reduce his estate tax exposure and protect assets from creditors. The result? He cut his taxes by over 40%, created tax-free income for retirement, and protected his legacy for his children and grandchildren. These are not strategies you hear about on the radio or from generalist advisors. These are elite planning tools, but they're completely legal, and they've been in the tax code for decades. Whether it's a charitable trust, a private reserve strategy, or a premium finance policy, these tools can supercharge your retirement planning if you know how to use them. So let me ask you, what kind of retirement do you want? One where you're constantly worrying about taxes, market losses, and healthcare costs, or one where your income is guaranteed, your money is tax-free, and your family's future is protected? Let me leave you with one last story. Maria. She came to me a few years ago after her husband passed away. She was overwhelmed. He had handled all the finances, and now she was trying to figure it out alone. When we looked at their plan, I saw that everything was tied up in a taxable IRA and a risky market-based portfolio. No protection, no tax planning, no guarantees. We restructured everything, created a tax-free income stream, protected her against long-term care expenses with living benefits, and gave her confidence that her money would last. She sent me a card last Christmas that said, "Alan, thank you for giving me peace of mind." That's why I do what I do. Now I want to offer you the same opportunity. Go to my website at strategicwealthstrategies.com. There you can schedule a free consultation directly with me. No pressure, no obligation, just a real conversation about what you want your retirement to look like. You'll also find my book, Time for a Retirement Solution, available in paperback and on Kindle. You can download a free chapter just for visiting the site. You've worked hard your whole life. Don't leave your retirement to chance. Let's create a strategy that gives you freedom, confidence, and clarity. Thank you again for joining me today. I'm Alan Porter, certified financial fiduciary and tax strategist, and I look forward to helping you unlock your tax-free retirement.